Alright, what is up? Today is Wednesday, March 18th, 2026. So the trade recap for today ended up taking one loss and one break even. Let's go straight into the trade recap. So today was kind of an easier day to spot my bias, and there wasn't really much um, conflicting information that would make me want to be bullish. So I was pretty bearish looking at the higher time frames. You can see that at around 8:30 or 8:40ish, approaching 9 o'clock, we manipulated these 1 hour lows, tap into the forward gap, and before that, so during Asia and London session, we manipulated previous day highs and took out some of these 4 hour highs, both on ES and NQ. So manipulation, we had the reversal during London session. And then going into the 1 hour time frame, you can see we had a manipulation of these high resistance, strong drawn liquidity on the 1 hour. And we did not have a reaction from it, which made me further or increase my bearish bias pretty much. So we're in this 4 hour gap, we take out these lows on ES, do the same thing, right? And now my immediate drawn liquidity, or my eyes just automatically go to our previous day lows and these lows over here. And so that's the overall objective on the higher time frame, right? But just based off looking at this, I knew that I would want a retrace in play more than anything else. And unfortunately, we don't have an untapped hourly gap that would be a reasonable retrace, because the only untapped hourly gap would be here. And by the time price action even gets here, then we would have a fully bullish bias, and we've already flipped our bias. So right off the bat, I'm gonna hope that we go to the 15-minute time frame, 5-minute time frame, and see untap 15 or 5-minute gaps where we can tap into and see a rejection off of those and a reversal, and then where I can get my entry. So that's the mindset going straight into market open. Pretty much go into the 15-minute time frame, and then I spot the first unmitigated 15-minute bearish fair value gap. And what I wanted to see is set the condition up. I want to see us go tap into the 2-minute gap and reject off of it. And pretty much I also put the equilibrium tool to kind of get a gauge as to how far of a retrace the 15-minute gap is. And I noticed that it was it was about around equilibrium, so I've been totally fine with that retrace. Um, it's not at equilibrium or above it, but that's totally fine because we did take out the strong liquidity, but we didn't show a strong reaction. So therefore, it wouldn't make sense for us to go into equilibrium as a requirement for this short trade. The market ends up opening, and one thing to note is on the 5-minute, we can clearly 5 and 1 minute time frame, we can clearly see that price action is very, very slow after manipulating the hourly low and moving into this hourly gap. So what do you call the retrace and leg that we're building up from 9 a.m. all the way to 9:30 is very slow. So that's one thing to keep in mind, because that's one thing that I think I should have taken into consideration that would have made me take a better trade and prevent the loss. So basically, we move up into this 15-minute gap. Price action is still very much slower, and that's totally fine because we had the largest leg of displacement during London session with a huge move down. So we could expect some volatility to be, some less volatility to be there, and also we have FOMC at 2 o'clock, right? So to keep that in mind. So market opens, we form New York open low, New York open high, and then we slowly just go ahead and take that. Where's 9:30? 9:30 is here, and slowly go ahead and take that out. Now, our first thought process, okay, we're in the 15-minute gap. I'm gonna take any first inversion that I see, and initially, for the first trade, the inversion that I set as the condition was what was this 1-minute gap over here. That's the highest time frame. Of course, we had some 3 minutes over here and a 5-minute over here, but with where the retracement leg is and how it is not too far up into equilibrium, by waiting for the 5-minute, it could be a little too late, because by then we could have a lot more displacement and not catch a trade, or catch a trade with a terrible RR. So the 1-minute IFVG is perfectly fine for me. We had these 5-minute highs over here, so I ended up taking this trade with the strong displacement candle. Stop loss is above this high, and my we call it TP was at the session lows. That's what I wanted to see get hit. Obviously, in the grand scheme of things, on the higher time frames, we want to see previous day low get hit, which I do strongly think we're going to get hit, and I do think that it's possible for us to hit it when FOMC comes out. And I'm taking this trade, strongest facing candle, and I got immediately stopped out. Now, the reason why I think this happened was we had good displacement. but we just didn't generate enough liquidity, and I think this was just a move to generate liquidity, so it's unfortunate. I should have taken into consideration we had a lot of choppy price action, and we didn't really have any, like you can see in the 5 minutes, it's a whole bunch of wicks, no fair value gaps, no, what do you call it, discounted price ranges. So I should have waited or understood that, okay, we want to generate a little more liquidity and then move down. And also sweeps in liquidity before, because at this point we didn't sweep in liquidity, we just went up, tapped into the 15-minute gap and retraced. But what I should have thought was, okay, I'm looking at 5-minute highs, we could sweep these, or we could generate liquidity here and then resweep these highs and then reverse. So that was a key learning point. I only risked $600 on this trade. Totally fine. Not upset with this trade. I had the good intention and the good mindset with it. Then moving on to the second trade I took was literally 2 or 3 minutes afterwards. When I noticed that after this was, what do you call it, a fake out, as some people call it, or a resweep, we formed the 5-minute SMT with these 5-minute highs over here. You can clearly see ES did not take them out. And then from there, we got another highest time frame inversion, where I entered off this leg and set my stop loss above the highs, protect the high over here, because SMT inside a 15-minute gap, right? So we wouldn't want to see, or we wouldn't expect price to revisit those highs and invalidate the trade unless we take out some sort of liquidity, which I set my break even to at over here New York Open Low. So yeah, my break even was at New York Open Low initially, because that's one point in price action that I thought that there was a potential to reverse off of, because we're in this 5-minute gap over here, right? And also it's the New York Open Low, so that's also an automatic draw on liquidity. But unfortunately, once again, we were met with hella choppy price action. Fortunately for me, I didn't really care much, because I had very strong conviction that after this first the fake out, and we got a manipulation of this leg and a manipulation of this 5-minute high and SM2 to 5-minute high and a rejection of the 15-minute gap, I knew that we were gonna get this, or not knew, but I had a strong gut feeling that we would get it. Chopped around. Right, 10 a.m. open came, and we inversed this 1-minute gap. So that's for sure when I knew that, okay, this might be the displacement leg, because when 10 a.m. opens up, we tend to get the displacement leg, and we already had the manipulation leg of the session, right? So that was this whole move down, and now we're just getting a continuation trade. So at 10 a.m., after we inverse this 1-minute gap over here, I was pretty confident that we should not be going back up and revisiting the highs. So yeah, I set my break even after we take out these lows and these lows over here, and I didn't really set them. I should have set them to the New York Open Low, because there's just lack of volatility, but we still have the right draw on liquidity. Because if you think about the grand scheme of things, you go to 15-minute, 30-minute time frame, you can see there are no other good draws on liquidity for price to go to other than these session lows and the main objective, which are previous day lows. So I should have kept that in mind, but could have, should have, would have. I'm just journaling this trade, and I'm gonna try to not make the same mistake and look out for when price wants to resweep and when price doesn't, and when I should place that as a a condition in the market before I enter. And yeah, I mean, you can clearly see that after we took out these lows over here, we reversed. I got my break even out in this area over here. Even though they reached up these highs, which I didn't think would be a condition or something I'd want to see, but we swept these highs, and after that we just shot down, took out New York Open Low, chopped around more, and took out session lows just like that. It's unfortunate because when you get messed around and chop, you get kind of nervous because price sessions that's probable. So I could have held it obviously, but I really did not see the need, especially with 10 a.m. open, for price to revisit these highs and then move lower. So that's just what it is. I just follow my trading rules. No more than 2 trades a day. Got the auto trade lock on, and yeah, that's pretty much the recap for today. Hopefully we get some nice displacement for FOMC and get a nice setup for tomorrow. And yeah, I'm still looking pretty positive on the week. Positive outlook. We have Thursday and Friday left, and this whole week I've taken trades where I felt pretty confident about. And I'm avoiding trades that don't seem right to me, except this one trade over here, but that's just a learning process. That's something I learned today. So look out for resweeps of legs, or look out for resweeps when we haven't generated enough liquidity, and when in a retracement kind of position right there. That's the recap for today. And yeah, see you guys tomorrow.